Welcome back to the channel. We're going to be going over the SP 500, the Nasdaq 100, and exactly what happened on the market today. How did we know the drop was going to happen? What did we expect tomorrow? We got some big stuff happening on the after hours, and let me tell you exactly what I'm trading. Before we get into that, I'll tell you and ask you to consider doing two things: liking and subscribing. Every day I'm posting videos just for you about how the market's moving in the news and exactly what I am trading. As well, the Facebook group, I posted this earlier today, right near market open. I said Nvidia puts, I got some of these, they printed. I got Tesla puts as well, mentioned them here in Discord. I gave my exact entries. We talked about those, absolutely printed. I'm trying to help you guys out. If you're not in the Facebook group, the link is down below. More content's coming. Let's get to it. Now, what I want to talk about here is specifically the Nasdaq. Now, going into yesterday, what were we talking about? We were expecting to come down into the zone, roughly 12.15, 12.2 range, and you came down right to that zone. You ended up coming down locally to about 12.05, coming closer down to that $12,000 range, and then bouncing back up. Pretty big stuff going on there. SPY, you have some really interesting movement here on SPY, and I want to focus a lot of the video here on SPY. I want to mention today, you saw the Nasdaq really hurting, and you saw ES and SPY. They did have drawdown, and we made money on SPY puts. But I want to talk about specifically, I believe ES and SPY look stronger than something like Nasdaq. And there was a lot of strength really coming in here. So we had that key level 392, finally broke. You came down locally to 390, and then you bounced from that range. Every one of these areas we talked about yesterday. We talked about how there was going to be blood today, and it came out, and there was. Now, end of the day, I'm going to tell you before we even go any further, I bought SPY calls. And now, even in my own Discord, even telling people, everyone hated the play. I said, basically 20 minutes before close, I started getting 395 strikes for Friday, 255s. Said holding 4 of them overnight. I said risky play, but I think Microsoft and Google could surprise. Also, ES held a big level. It's a risky play. Anyways, that's what I'm doing. So I'm always sharing what I'm doing no matter what in Discord. I like to be transparent, winner, loser, risky, not risky. I always share it. And I also tell people if it's a really risky play. But I always stay true to everyone and let them know exactly what I'm doing. Now, SPY, you're getting a little push on the after hours. You're pushing up. What's going on here? First of all, Google started pressing up. You were at 104. You got as low as 104 flat, and you're pressing back up to 108 right now. Why? They missed on revenue. It's worth mentioning, and EPS, but their revenue barely missed. It was a really good miss, if you will. And if you're asking, what does that mean, a good miss? So if you look at what's happening, Google is still showing year-over-year growth. Their YouTube growth from ads, booming. Their overall advertising on Google Ads, booming. Everything they're doing is essentially showing great growth year over year, time and time again. Very good news. That's what's happening here. So despite being quote unquote in a recession, which I think a lot of us could agree we're in a recession or we're coming into one, Google is still showing good growth. Microsoft. A lot of people thought Microsoft was going to be a big loser here. After hours, you push down, you bounce right back up. I thought there was very minimal downside on that. Microsoft, just based on how weak you've been over the past few days. And I also want to mention, I think Snapchat was an over-exaggeration to Google and Facebook. And I want to tell you right now that those are probably going to be your hot stocks to trade tomorrow. It's going to be specifically Facebook into their earnings, Google, anything like that. Those are going to be hot plays to trade because they're so beat up because of what happened from Snapchat. So going into tomorrow, obviously, I expect a little bit of upside. But what's going on tomorrow? You got your Fed rate hike decision, 2 p.m. Eastern. Very, very big. This is the big boy what we're talking about. They are expecting a 0.75 hike, and that's what's kind of being priced in as we speak. If we come in at 0.75, I'm not saying it's bullish for the economy. However, as long as they stay at this kind of peak level at 0.75 and they don't raise it past that, I think you have to look at the market in a bullish sense, and you're probably going to be looking for more potential upside. And they're probably going to talk about the growth on the economy and why they believe it's strong. Now, again, do I believe the economy is growing? I really don't. I think overall we are not growing. I think we have room for more downside in a long-term viewpoint. That's my long-term outlook. But short-term, I'm just trading to the upside into tomorrow. That's my short-term daily trade. Long-term, I see new lows coming in like 100%. That's my overall viewpoint. But going into that, that's what I see. It's worth mentioning as well. I want to show you what I'm looking at specifically. If you come back to previous days, so we're going to look at June 15th and May 4th. So we're gonna look at the day before those actually. So May 3rd and June 14th. If we come back to those specific days, specifically on SPY, it's gonna give us a better visual. And we're gonna go really quickly over to June 14th. What happened on that day? So going to June 14th, you saw some downside right here. Just like we did today. Pretty strange, right? Downside, downside, downside. End of the day, wait, what happened? We bounce. We bounce at the end of the day. And then the next day, what happens? You gap up. And you have some downside basically into the rate hike. And then you shoot back up and you come back down. Now we're going to go to May 3rd really quickly as well before I let you out of here. We're going to come really back and just try to prove a point to you. What happened here? May 3rd. Oh, surprise, surprise. Here we are, right? May 3rd, some downside, and you start chopping. The next day, boom, you start shooting back up for that rate decision. I'm just saying it's the same thing over and over, just kind of patterns happening right now. Again, I'm just going with the flow. I'm giving what's being given to me, and I just thought you were really beat up on Google. And these other ones, I saw some room for upside, and I try to let everyone know as I was getting into those as well. So that's what I'm looking at for tomorrow. If you can get above this 392 range, you could easily come back and test 395. During the rate decision, we've seen a lot of volatility from there, so I recommend just being very careful during that rate decision. The big decision and the big downside play, in my opinion, is going to be Thursday. I don't believe tomorrow has the room for massive downside. It could happen, but the massive downside is going to be on Thursday if it's going to occur. Why? Because 2 negative GDP ratings. We've gone over what the White House has said. We've gone over how they're trying to twist the definition, but we have to talk about exactly what it means. Having 2 negative quarter GDPs, what does that mean? It's calls for a recession, in everyone's opinion, besides the White House. So that's very important to know. That's what I'm looking at, and that's ultimately how I'm trading this right now, is hopefully getting that upside in the morning, getting out of those positions, sitting on my hands throughout the day. Once we get the overall rate decision, trading maybe based on that. But until then, this is what I'm looking at. Now, I want to highlight where I'd be very bullish on the market. If you get above this range right here, this makes you bullish, in my opinion. If you get back above 396, this is where I'd be bullish. If you get below the 390 range, this is where I turn bearish, and I want to explain exactly why so everyone knows as well. And just so you can kind of follow what I'm doing and hopefully learn something from this video as well. So essentially what I've been talking about is previous highs and previous lows, and this has kind of set the tone overall for the market. All right, so a key level I was watching right here, you can actually bring this down a little bit more, was your previous highs you had made right here at locally 389, basically to 390. You found support there. Next level, 392.8 down to 392.2. Found support and resistance there. Next level, 396. Found support there. Found resistance there. It's a key level. Now you can continue to do this over and over and over again. So right now, as you make a lower level, this is going to become the most important level. This level is still as important. There's still going to be resistance there. However, in my opinion, 390 is your main level to watch. So if you start breaking through 390, what do I expect? You start getting that breakthrough to the downside. Guess what we're looking at? Retest and then shorting to the downside. If you by some chance get all the way back up through the bull zone, you retest. We're looking for more potential upside from that range there. But I want to really state it. I wouldn't really be looking for upside positions for a longer term viewpoint until GDP is released. I'm just saying you want to see how the market's reacting to that, because I guarantee it's going to be pretty crazy. VIX as well. We saw a really nice spike on VIX today with the downside that we saw. We saw a push, I think it was like an 8%, 9% move to the upside, about 25, 29. We talked about this yesterday. It was setting up for a bounce here, which indicated more downside in the market. That's what we're looking at here with VIX. You're still in this range of 24.5, and you haven't really broken out of this. So it leads me to believe that there is room potentially for more upside in the short term as well. Another reason why I took the SPY trade. So looking at that as a whole, that's what I'm looking at. Now, the last thing I want to talk about is going to be junk bonds, and we'll go quickly into Bookmap as well. But looking at junk bonds, you've been dropping all day long. End of the day, you saw a little bit of a bounce. After hours, not doing anything. So junk bonds, I'm going to be keeping an eye on these. But this is one thing that was really sparking my interest yesterday for more downside as well, is that you saw some upside. And then at the end of the day, when you saw that bounce, you didn't see that much upside on junk bonds, which led me to believe that more downside was coming, which is why I ended up getting into that short position. Junk bonds, once again, you want to see if you get above this 94.4 level. You get above this, you're looking for longs right here on whatever stock you're looking at, right? Because junk bonds show the risk on sentiment on the market. That's a very important aspect to be looking at. Now, really quickly before I let you out, also want to talk about the yields. What's going on here? Yields bouncing back today. You can see them finally bouncing back. But the big thing to watch here really isn't even the specific tenure. It's just really watching that inversion, and it's what I continue to watch. Now, you haven't broken those lows yet, which we mentioned right here, about 91, 92%. You're making a double bottom right now. If you start breaking down out of this, you could really start seeing some potential upside. This has been a key indicator on the market. You've held this zone for almost 4 months, and I'm going to continue monitoring it because it's so important. You're saying about 93% inverted. Very important. This still shows you are in very bearish territory on a broad scale, long term, not short term, broad scale. That's what I'm looking at this for. DXY, again, guess what happened? If you stay here on the channel a lot, then you're going to see me calling things out specifically on longer term things. So for instance, DXY yields, those are going to give you a long term indicator. That's kind of what they are for me. They're an indicator that shows what's going to happen in the future, right? So for instance, when the markets were bouncing, the dollar value was tanking, right? It was just dropping, not tanking, but it was dropping, right? And this was our support. Where was it? It was our previous high. Spoiler alert. As you come down, you don't even make it to that level, but you're getting very close to making support there, and you're bouncing. You know what? It's not too surprising because we've been talking about this a lot here on the channel. So our long-term indicators are definitely showing us the downside potential. So I want to highlight that. GDP, I'm not looking too hopeful for it. I'm looking for more downside going into Thursday, but I think tomorrow could be a very, very volatile day. Tomorrow, I expect anything and everything. It's going to be crazy. And you can still see this key level right here. I want to show you very quickly where you're at. You're still holding this key range right here, which is very important for the bears. As long as you stay above this, you are looking bullish. Again, look how you're holding that. It's your same previous high that you had formed right here. You're holding it, tapping, bouncing right back up. I'm just saying, look at the chart, speaks for itself. This is how I'm making every single one of my trades, is looking just at indexes. Again, if you want to get more information, join the Facebook group. I'm talking about this stuff daily. Also, if you're interested in joining the Discord, the link is down below. Just go down, you can sign up and see everything that we're doing, trades we've done. This is our website right here. Check it out as well. Before I let you out of here, I want to talk really quick about Bookmap and ultimately what happened here as well on the heat map. It's going to give you a pretty good visual if you're a visual learner. I think this has really helped the community overall when I go over this. So hopefully you can stick with me. Number one, I'm going to talk about this red line. This is your CVD. If you don't use a CVD, I recommend looking into it. Cumulative volume delta, very big, very important. All day long, you saw massive amounts of downside on your CVD. When your CVD is pressing to one side, ultimately what it shows is sellers versus buyers. All day, sellers were dominating the market, even on the upside. More and more sell orders were coming in, and you can see coming into the market as you were bouncing, sell orders were getting filled, limit orders getting filled as well, pushing you back down. Negative 23,000, very, very high on the CVD. I'm just going to tell you it's extremely, extremely high, and that's not even the low of the day. That's what I'm looking at there. Going into the icebergs, this is going to show you what's happening. Let that load for a second, but I want to show you what's happening here as well. So you're seeing these continuous new lows being made, and you're also not making higher highs. That was the concern for me. We're going to come back to Bookmap here in a second, but what I want to highlight is if you come back to around the 15-minute chart, you weren't making any higher highs all day. Very important to know. You were following this key trend towards the down. So let me just grab this one right here, just show you. You can see right here, you continue to kind of hold this trend towards the downside all day long. Now, if you can break out of this, you start making a little bit of a higher high there, keying you for some volatility, which makes sense going into the rate hike decision, because rate hike decision days, guess what? It's when we get all our volatility. Going back to Bookmap, we can see that as that loaded, you can see today was a really interesting day, and I was talking about this a lot in Discord. This blue line right here represents your dark pool and your hidden orders, basically things that aren't going to show up in your level 2 data. You were seeing they weren't massive orders, but they're between 400 to 500 lots, which is a significant amount of money. And you can see it continuous all day long, lots of smaller buy orders. During this dip, look at all these buys. We saw this before. Remember on some of our previous videos, we talked about this, and the next day we saw a lot of potential upside. So this is why I was grabbing those calls as well, was because looking at this overall, I see the potential definitely for some upside volatility going into tomorrow, specifically when I thought and assumed that Google and Microsoft would have a surprising earnings as well. And look, you're pushing up here. It looks really good. Even on all this downside, the buyers were still coming in on the hidden order book. We can see coming into something like Microsoft and these earnings, we saw lots of calls coming in near the end of the day. Lots of big, look at all these big orders around power hour. Boom. Huge amounts of orders. Now, the put to call ratio, it's really close to 1.0, but look, a majority of those calls came in right at the end of the day, and they were very big orders. Going over to Google, the same thing happened yesterday with Walmart before the big drop, and we notified people in Discord as well. Jerry mentioned it. Pretty scary stuff. Google, more even 1-to-1 ratio, but you're saying it doesn't even matter because guess what? Google's going up in the after hours at 108.5, and it's probably going to be tracking closer to 110 going into tomorrow morning. Microsoft also slightly green as well, kind of just break even, but anything is better than red right now, which indicates, again, more potential upside going into tomorrow with the volatile day ahead of us. Now, before I let you out here, I want to just say one thing. Am I expecting tomorrow to be a very bullish day? Not necessarily. I'm expecting a lot of up and down, a lot of volatility going into the rate decision. Why? Because that's what's happened on the past 2 sessions. So I want to indicate that first. That's the main thing going into tomorrow. I do see upside coming in the morning early on. I see some type of gap up. That's what I'm looking at. But going after that, I'm going to be sitting on my hands and being very patient until the rate decision. But we need to know, what is the most important thing this week? GDP. 2 negative GDP, in my opinion, is very, very concerning. If we get the negative GDP, I'll be looking at longer term puts on the market, which most likely we will get a negative GDP. But I have to say if, just in case. I don't want to be a fortune teller out here. I try to give you a non-biased viewpoint all the time. That's going to be it for today. Have a good one, traders.